This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it is the scrumtralescent Rob Reinhold.
Thanks, Patrick. And you got to stop with these little adjectives because they won't all fit on my headstone. Every time we're going through this, I'm writing down like, oh, that's going on my headstone. That's definitely going on my headstone. We're now out of space for sure. Hey, it's good to be here. Let's talk about what happens in the brain. I love stuff like this.
Yeah, and for anybody scoring at home, scrumtralescent is a Saturday Night Live deep cut reference. If you don't get it, that's fine. But yeah, this one is interesting because I would normally not think there's a whole lot of psychology here. And my solution to this little thing we're about to talk about is to simply find ways to avoid it. But one, not everybody avoids it. Two, there are other news events that can get in your way. And three, no matter what we do or how we do it or what we choose to avoid, we cannot fight the Fed no matter how hard we try. It just seeps into everything. And even though this episode is airing later, Rob and I are shooting this on Fed Day in December 13th. And so we thought it would be an appropriate episode to talk about today while it's fresh. And this is mostly going to be Rob because his people not only don't fear news trading, they dive right into it and they have methods behind it. And so this is a really good episode for him. But for my no-nonsense Forex traders too, there are going to be takeaways. Rob and I spoke about this a little bit beforehand, and I'm like, oh, there's some good stuff here. So Rob, go ahead and lead things off. And this will be another one of those episodes, I think, where I just jump in where I feel it's appropriate.
Thanks, Patrick. This is not only about psychology, this is also about physiology. And a lot of the times we think, oh, the brain is just doing its own thing. And you have to understand, the brain is being prompted to do stuff. And yes, we're talking about Fed meetings here. We're talking about what happens before a Fed meeting, what happens when the Fed actually makes the announcement, what happens after. We're going to go through that, and we're going to go through what is actually happening in your body. But as Patrick said, this is what happens anytime there is anticipation of something. Your body is going to go through the same process, and if you don't understand what the body's doing, it goes back to what we talked about in the first couple episodes. You're a robot. You literally do not have free will in some of these situations because you've put the brain in charge, and the brain isn't in charge because the hormones are in charge. The hormones are flooding through your body, and you no longer have free will to follow your trading system. So yes, we're going to be talking about the Fed meeting today, but this could also be before the Bank of Japan. This could also be anything in trading. You could look at the Open. Oh, this is in front of the European Open. This is during this period of time. It applies everywhere.
Yeah, and unfortunately, this is something that, as I said before, I like to avoid. But as we've seen in the past, I don't know, maybe 2-3 years, this is just not something you can avoid all the time. Things are changing so much. I did a video on avoiding news all the way back in 2018. And people have asked me for an updated version. And I'm like, guys, you don't understand. I mean, you guys might understand the trading game, but I don't know if you understand the YouTube game that well. I could do that and put out a video right now telling you, okay, now these are the news events you need to avoid. But things could completely change 3 or 4 weeks after I make that video. And now that video is now the new standard. And it's wrong. And it's out of date. There's just, things are changing at such a clip, we can't catch up to it. So even people like me and people like my no-nonsense Forex listeners are going to be affected, are going to have these issues come up, whether you want them or not.
Well, no one can avoid these because we have what are called known unknowns. The Fed meeting is a known unknown. We know that it's held every 6 weeks on Wednesday, and they announce their rate policy at 2 p.m. Eastern Time. We know that. This is a known unknown. What we don't know is about the unknown unknowns. COVID, Bank of Japan intervention. These are the things that are going to pop up, and we need you to understand they're not all avoidable, and if you can't avoid them, we need you to understand what's going on in your brain and body so you don't turn into a program that's just shooting off whatever you've got in your brain instead of being in control of your emotions. So let's start off at the beginning. Let's say it is the morning of the Fed meeting. They are typically very quiet. Stock market's quiet. Forex market is pretty quiet. And going into the announcement, we start to get some wider spreads. People are laying back. Everyone's in this anticipation because they know, and you know, at 2 p.m. Eastern, things are going to get wild. Everyone knows that. We're just sitting behind our screens watching it. In your body, understand what's happening. You are starting the process that the body does to take action. Adrenaline starts to come. Now, we've talked about all of these chemicals, adrenaline, dopamine, cortisol. The body is spooling up to get ready for action. So it builds up the adrenaline and it starts to excrete the cortisol. If you remember, cortisol is the hormone that shuts down a lot of the other senses, shuts down a lot of the other systems so you can focus 100% on these other things. Your heart rates go up, your eyes get dilated again. All these things are happening in this anticipation. This moment is the best moment because all the scientific studies show that the largest release of dopamine is right before the event, right before you get that reward, is the highest hit of dopamine. Now, I remember as a young trader just sitting in front of the screen, waiting for the Fed meeting, and I'll tell you, everything happened to me that I'm telling you. My heart started beating faster, my sweat started coming on, my breath became a little bit shorter, not as deep. The body was getting ready. I didn't even understand that I was turning more into an animal than a rational human being. Patrick, do you ever remember in your early years, right before a big announcement, what is happening with your body?
For sure. And that sounds pretty accurate. I probably didn't really think about it at the time, but you definitely feel a change in your overall psyche and really your body too. Because, like anybody back in the day, I was always trying to catch those quick moves. And if this was the opportunity to do that, then I'm here for it. And just like you said, right before the announcement comes out, the chart's moving like a lie detector test, like a seismograph almost. It's just so twitchy. And you're like, oh, here it comes. And then it starts moving one way. And you're like, but they haven't announced anything yet. Why is it moving that way? Is this a fake out? Is this a fake out of a fake out? What's going on? And all these things are swirling around in your head. And you're actually trying to play this thing as somebody who doesn't even really have a plan in place. So that was my experience back in the day. And the emotions were crazy. And then when you hit it, you felt like you were just tuned into the market like nobody else. And you were this market soothsayer, and this is exactly what you need to be tuning in for every single time. So I'm like, wow, this was non-farm payrolls is what I'm thinking about. So I'm like, ooh, maybe I need to hit the Bank of Australia rate decision and all these other things. I need to be here for all these things. Because I remember on my first 2 news event trading instances, I actually made a bit of money. So that really kind of ruined me for a while. It was after getting my ass handed to me many times after that I say, okay, maybe this really wasn't the best way to approach things. What do I need to do going forward? Do I really need to be a part of this, like people have told me, or can I just simply avoid it? But yeah, I guess that's my story, start to finish, on my very short stint trading the news.
What an amazing dopamine hit that must have been. Imagine, I'm just playing it over in my mind of you sitting there, you hit it right, you made money, you nailed it. Afterwards, oh my gosh, yeah, that you had to feel great. And we're going to talk about after the news, because what happens is you're going to write scripts for your next news event. You're going to write a script, and the anticipation is going to be even greater the next time. And you're just going to be writing these scripts. But we'll get to after the news. So again, the body is preparing for action. Now remember, the brain has different parts for different things. Action and reaction are done in one part of the brain. Thought and weighing out consequences are done in the prefrontal cortex. So basically, everything that's happening in your body is directing things away from the prefrontal cortex towards the insula and other areas of the brain that are more of the fight or flight response. That's literally what all the chemicals are preparing your body to do, is they're preparing the body to not think with its prefrontal cortex and to react with the more primal parts of the brain. I need everyone to understand that this is what's happening. And you are becoming primal, where you are no longer the rational thinking person. Now look, you still think you're thinking rationally. Well, what are you talking about, Rob? I still thought about it. Not really. And that's the point I'm making, is that you are more animal at that point than human. That's exactly what the body is supposed to do when it has a fight or flight response. So let's talk about what happens after the news. So either you took action, which Patrick, you said on your first two, you took action and you made money. And now all of a sudden you start to say, I need to trade RBA. I need to trade this, because that dopamine hit. It wrote new scripts for your brain. Now let's say you didn't take action. So let's say that you went through that whole thing. You didn't take action because you were disciplined that time. That time you followed your discipline. You didn't overreact. You patted yourself on the back, but your trade moved 200 pips in the direction you thought it was going to go. Your brain is going to write that down. It is priming you for the next time you have a Fed meeting. It's going to prime you to take action this time. There's going to be more impetus for you to take action because you were inactive last time. Does everybody see how destructive this process can be, especially to somebody who's not even self-aware enough to recognize what's happening, and they're showing up to every single news event, and they're showing up thinking, I'm a rational human being with rational thought using my prefrontal cortex. No, you're not. You have put yourself into such a bad situation to where you are more animal than trader.
Yeah, and as I've said in the past, the only thing worse than losing is missing out on a really big winner. So yeah, you definitely do write that down, especially if you feel like you were on the right side. I would always do this with sports betting. I would have a bias on a game, but I would chicken out, or I would forget, or whatever the case was, and then my team would win. I'd be like, oh, I really should have put some money down on that team when I did. Or if I chicken out and I just put a little bit of money down, I'm like, oh, I should have put a lot more money down, and I'm going to do that next time. All of these things are just a really toxic cycle that always ends up in the same place. So yeah, I just wanted to add that, because these are the feelings that I was feeling in the past, and maybe some people who avoid trading news now still see it and still have a bias, or still have a technical system that they could have put in place that would have worked really well in that moment. And this could really lead you down the wrong path if you're not aware of what's actually going on.
And what you just said, awareness. If there's been one theme of this Trading Psychology podcast, it's self-awareness. If you don't even know, think about the scenario I just went through of a younger trader going through this whole thing, build up, the news comes out, they don't take action, they miss out on a big trade, they write the script for the next one. It is so absolutely destructive to where this person has literally no chance of getting it right the next time because of this whole process we went through. So we then now come to the question of how to fix this. Now, obviously, if you're really thinking about this, you see how absolutely ridiculous it is as a younger trader to put yourself in this position. Now, let's say that you were coaching a new trader. This trader has been doing it for a month, and you fully know everything that I just talked about of what's going to happen with their body. And you tell them, hey, I'm going to be gone next Wednesday, but next Wednesday is the Fed meeting. I want you to trade that meeting. You would never, ever, ever, ever tell somebody that you were training to do that, but yet you do it yourself. So how do you do it? And it's actually a pretty easy way. And Patrick, I think your way is one of the best ways possible. So share your fix for this.
Okay. So the way I always set this up was through my big banks video, which was the viral video that I have on my channel, which most people have seen and most people now understand. There's something called the Cantillon effect. In money, it's where the richest people touch the money first and the poorest people touch the money last, and that's a huge advantage to wealthy people. That's just how it is. And the same thing happens in trading. News events like this, we already know what the big banks do to people's trades for their own benefit. Now, if they did it all the time, every single day, people would get wise to it. They would accuse them. These banks would get fined even more than they already do for doing the exact same thing that I explained, and they don't want that. But when big news events come up, Fed speech, non-farm payrolls, interest rates, that gives them the green light to do whatever they want without any consequence, because how would you even know that they're doing it? They can just blame it on the news event for all the erratic price movements. And so that's what they do. And that's why things should go one way, but they go the other way. That's why price moves so violently to the upside and the downside. And that's why sometimes every once in a while they'll give you a cookie and they'll just move everything the direction it was supposed to go from the start without any fake outs. It's all planned. Now, if I knew somebody else had that level of control over the outcome of my trading and therefore my money, I would avoid it like the plague. I don't want that. I want to be in control of my own destiny. So it's for this reason that when it comes to large news events like that, and even some medium-sized news events that over time have become larger news events, and even things like the Bank of Japan, like you talked about, Rob, it was always your catchphrase. I remember it said you could always sleep through it, and you always could, until one day you couldn't. So now we have this whole laundry list of news events that are there to screw up our trade, and the best thing to do is to simply shut everything down or move your take profit levels or your break even levels to the appropriate areas so you don't get caught up in the wash, and just sit out. I mean, it sucks because a lot of times the news event took your trade even further in the direction you were already in. A lot of times you had to take profit sooner than you really wanted to. But that's just how it is. It's part of the game. You just have to accept it. Sometimes it's going to work in your favor. Sometimes it's not. And you got to look at the bigger picture. It might really suck for 2 or 3 go-rounds, but in the end, it's also going to save you from losing a lot. And you now get to become the person in control of your account instead of a bunch of rich banks that absolutely do not have your best interest in mind.
You are correct that the simplest, easiest way to overcome this. Now, you went down the path of, hey, there's other people controlling the market at certain periods of time, and it's best not to play there. And I will agree with that. I have dived down that rabbit hole trying to find the proof. And yes, people get fined every now and then. What I recognize is that what's going to happen is going to happen. I have no control over the manipulation that happens in the market. My job is to be on the right side, is to be, again, if it's going to be a period of time where there's lots of manipulation, meaning they're trying to grab stops, it's my job to have stops that are very wide during that period of time with, again, smaller position sizes, wider stops. It's my job to figure out how to make money in spite of the manipulation that's going on in the market. So look, sitting out is a great way to avoid that whole situation. It's also a great way to avoid what I just went through, the hormones, the dopamine, the cortisol release, all that stuff. If you don't see it, you never get a reaction to it. And I'm going to recommend, when we say sit out, I don't mean you don't click a button, but you sit there and watch the screen. Because if you sit there and watch the screen, you are going to be writing programs subconsciously that is going to set you up for possible failure. If you literally check in of what happened on the Fed day at 5 p.m. Eastern time, and you go, oh, that's what happened. Had a lot of volatility, but then it ended up going higher or going lower. You didn't get all the stimulus. You didn't get all that stuff that made you write scripts to screw up the future. So if you're going to sit out, I recommend you turn off all screens, all systems, all everything to truly cut the stimulus. Check back in at the end of the day, see what happened, and then make your decision off of that. Patrick, have you ever given that advice to literally avoid it? Because there is no good that's going to be done if you watch it. If you aren't planning on trading it and you sit down and watch it, that's doing you no good.
Well, for sure. I'm the guy that tells you to take every trading app off your phone so you don't have the temptation to look at it. Because if you look at it, it's going to tempt you to make a move. And if you're doing that, then you're not following your system. You need to let it play out. Yeah, we're 90 minutes past the Fed meeting and Powell's speech, and I still don't know what happened. You'll have to tell me after the show, Rob. But yeah, that's how much I don't care. And this time around, it worked out really well. We talked about how negative it can be sometimes. This was great. I was in two really good dollar trades. It was dollar Swissy, dollar yen, and they both hit my take profit 2 days ago. So I closed them down, and now I'm looking for possible re-entries in a continuation trade. And I did peek at the charts before we came in, and it looks like I'm probably getting that. So sometimes these things can work out really well. And you don't have to worry about catching it right at that time. Especially, Rob, I don't know how, while we're on the subject, how you even trade the Fed rate decision, because it's not just an announcement and then off to the races. It's an announcement and then it's a speech where people are trying to parse out different words to see if he's hawkish or dovish. That's got to be a miserable thing to sit through and try to figure out. Do you approach that differently than you would something that's just a single announcement?
Absolutely. That's actually two announcements. And we do this a lot with the ECB. So you get the ECB statement, and then 45 minutes later, you get the press conference. It's two different trades, potentially. If there's a big move on one side or the other, we'll typically look to fade it on the press conference. That's a pretty typical trade we'll take, So let's say, dollar yen rallies 150 pips going into the press conference. The risk reward says to take the other side of that trade. But again, this is where I don't want to speak in specific terms. Every trader is different. Everyone has different time frames. Everyone has different things. But yeah, it's definitely two different news events, because we've all seen it to where the statement goes one way and they get on the press conference and it goes right back the other way, even further than when it started. That's a very typical thing to see.
Yeah. So I guess the moral here, outside of the psychological aspects of it, is that if you really do want to trade news, well then join Maverick Currencies, because Rob is one of the few people I know that actually gets it right more than he gets it wrong. But if you're more than happy simply avoiding it, then stick with your boy here at No Nonsense Forex and just continuing on, understanding that there are going to be times of real frustration when it comes to this little cat and mouse game we play when it comes to avoiding news. So Rob, do you have anything else to close with on that, or actually, have I jumped the gun here on the conclusion?
No, I just kind of wanted to go over some ways to reduce that stimulus. Like if you are going to play news events, which I love to play news events, they're my favorites. I really like to play them. There are things that you can do to reduce the stimulus. Now, if you have a trade, let's say that you have a trade on, let's say you're trading dollar yen, you're long dollar yen at 145, and you have a stop at 140. That trade isn't going to give you stress. Like you don't need to watch tick by tick, because you're a mile away. You're just a mile away on the stop. So you're going to feel less on that trade. You're going to have less dopamine. You're going to have less cortisol. Everything's going to be less because your stop is not in danger of being hit. But let's say you're trading a news event Let's say you're long dollar yen at 145 and you got to stop at 144.75. Yeah, you've now put yourself in a situation where you are going to feel that trade highly, and you're going to be very unlikely to be able to make a rational decision. So you have the ability to dial up or dial down your feelings based on how risky that trade is. And again, and how much capital you have at risk, how close your stop is to the market price. You have a lot of control. So what we do at Maverick is we basically say you can trade these news events, but you've got to dial down risk. You got to take down risk in both position sizing and where your stop is. And we talk about, having stops very far away, which means your position size might be a fifth of what it was. So you might be 5 times greater than your usual stop, but you also have a fifth of the position size you usually have. Once you do that, all of a sudden, that announcement doesn't carry all the weight that it does if you have a very tight stop with a very full position. It's just not that big of a deal. You don't feel as much because the risk isn't just right in your face. So if you're going to play news events, the worst thing you can do is use a full position with a regular stop. You may as well flush your money down the toilet. Everything you talked about, Patrick, the manipulation, the widening of bid-ask spreads, we call it the whipsaw, the quick run up, quick run down, knocks every single one out of the position, longs and shorts. Everyone gets screwed, and then it just sits there and does nothing. You can't be involved in that. So if you just want to sit out, sit out. If you do want to play it, then what you need to do is you need to make positions that don't carry all of the emotional risk to it. Small position sizes with wider stops allows you to play that move, and then after the move is done, and after the news is out, then we like to go in and add on position sizes in a periodic pyramiding system to where if it did go our way, then we can add in another fifth of a position, another fifth of a position, and then over time we can build up to a full position. And it never had the big risk. It never had that moment where, oh, I'm about to get stopped out, or you just get stopped out automatically after the trade. You've avoided that. So either sit out or take a position that has very little risk of being stopped out. That's really what we do at Maverick. And that's my advice to everyone if they're going to play these.
And I really, really like that solution. I'm still not going to do it, but on a couple levels. One, if you widen your stops, then you get yourself further away from that manipulation. Because I've told people, the big banks don't know where your stop loss is, Rob Reinhold, but they know where the majority of them are sitting. And if you can get out of those popular zones, then you have a better chance of not falling into that manipulation yourself. This was the whole structure behind why I talk about avoiding things like support and resistance lines. Not that they're bad. They're technically not. It's just a lot of people's orders are sitting there. And it's better if you create a system to where you have a better chance of your entries and your exits and your stops simply not being there. Real simple. But I also really like what you said too about adding on smaller positions as you go. Because that past emotion is already gone. And now you're just adding very small pieces along the way in a high probability fashion. I really, really like that approach. Now, one thing before we go, though, Rob, I see on the outline sheet, I totally jumped like way to the end before even looking at this. You have automation written down. Now, to me, this is where an automated system would completely fail because there's just these things are so wild and unpredictable that a bot would have no idea how to go in and trade something like this. But do you have a different take on it?
I don't want to call it a different take, but let's say that somebody backtested a system that did not avoid news events, and they rigorously backtested the system and they were profitable. They were more profitable sitting in the news event than not. Trade it. Trade it. If you've got the data to back it up, trade it. There's also, you can do exactly what I said. You can build in automation around these news events. Now, look, I'm not that good of a programmer, but I know there are some people that are good programmers. Or you could do a kind of a manual switch where, hey, I'm going to run my news trading program to where, this one trades differently around these periods of time. So like I said, I agree that on a regular system that's not set up to handle news events, it's probably a really bad idea to do automation. But if you've tested the automation and rigorously tested it with lots of data, and it's better with the news events in it than without, you just follow the automation. Just follow the system.
So on that note, traders, we've given you a complete rundown of what typically goes on when trading news, whether you're right there on top of it or whether you're simply trying to avoid it. Psychology does come into play on both ends. And it's very important to recognize that and have a solution in place. And Rob and I have already given you several of those. So Rob, I would say this is a very successful episode. We can go ahead and put it in the books. And Rob and I will both see you next week.
And remember, this is both psychology and physiology. Your body is going to shoot all those hormones around and really try to get you in trouble. Make sure that you're self-aware of this. Thanks, everybody. Goodbye.